The psychology, in my opinion, is the most important subject. And without psychology, without the right mindset, everything that you've learnt so far, you'll very much struggle to apply on a consistent basis. So what I wanted to do, instead of me sort of going through these slides here, I actually wanted to take a live session that I did with some of our students. In that session, we covered psychology in a lot of depth. We also got to address some of the concerns and questions that people had. So I felt that this would be much better value for you to actually go through that process of listening to some of the questions that we had. So I'm going to send you straight through to the live session that I did with some of our students. I hope you enjoy, and then finally you'll hear from me again live to conclude this course and give you the next steps for you to take to continue your trading education and career.
Okay, so welcome to the London Trading Group presentation here. My name is Andy Demi and I am actually the head trader here at London Trading Group. And the aim of today is actually to go through some psychological elements, like go through the steps that we take in order to become the right-minded trader. We're going to give you some actionable steps that you can take. We're also going to introduce our firm and what we do, so that you get a better idea of what we do and how we've kind of come to the position that we're in as well. And at the end of the presentation, I will, for those that are interested, I'll also talk a little bit very briefly about some of the education that we provide as well, if anybody is interested in actually developing their education. But the primary focus, guys, is on you. My goal is to give you something to walk away with, something that you can use and hopefully inspire you to sort of improve your trading as well. So let's get started. We'll take questions as we go, guys. I've got no problem stopping as well. I mean, if I miss anything, you know, I'll keep looking every few minutes. So if anybody's got any questions, and if there's quite a few, what I might do is, you know, right at the end, I've already kind of put a section where you guys can just go ahead and ask me any questions that you like as well. Okay, so what I want to share with you now, this is a couple of our traders. This is Raphael. He's actually our futures trader, and you know, asked the guys just to kind of give me a little bit about their, you know, how they feel about psychology, and they've been kind enough just to write me a couple of paragraphs here, which I'd like to just read, just to give you an idea of how we think here as well. So Raphael says, trading is about being able to control your emotions, whether when losing, panic, or even winning, euphoria. Reacting cold-bloodedly in any situation is fundamental. Part of the process of becoming a real trader is making mistakes, making losses, and learning from those mistakes. Now, I'd just like to pause there for a minute, you know, and repeat that. So part of the process of becoming a real trader is making mistakes, making losses, and learning from those mistakes. So for me, that I absolutely agree with that, and it is a big part of it. Okay, you are going to make some mistakes. You are going to take some losses. It's just part of the game, and you've got to be able to handle taking those losses. You've got to be able to be strong-minded. You don't take it personally. Okay, you've just got to think, well, this is part of my growth. This is part of, you know, the process. And if you fully accept that, then you're not going to worry when you lose, right? Now, the problem is that most traders, do they accept that or do they not accept that? Nobody, especially at the beginning, nobody wants to lose, and you don't really accept the loss, you know. And you'll probably, you know, if I'm sure you agree with me, for those that have traded even just you know, short period of time, you know, you probably get excited when you're making money, and you probably get really down and upset when it's going against you. And if you're feeling like that, it's nothing to worry about. This is just something that, you know, part of the process that you need to learn to grow, and you've got to, you know, which we'll speak about in a moment, but you've got to learn to become objective. So let's continue. You would definitely go through these steps. So do it with low capital. No need to invest big at the start. Okay, and that's very good advice. I mean, you know, whilst you're learning, why would you want to put all your capital into it? Okay, there's no rush. Okay, if you're in a rush, you're probably gonna blow your account up. Okay, because if you're in a rush, you're not thinking how a trader needs to think. You need to just think. It's not about the money. It's about the process. Okay, it's about putting steps together to build the formula for you to continuously make money. Okay, and that doesn't mean every single trade, it just means consistently year after year after year. I won't even say month after month because people can have losing months, but it's like year after year after year, you need to be growing your account. And let's also bring one of our junior traders in as well. Henry actually came through the academy. He's one of the sort of very, very good trader. And this is what Henry had to say. So trading is about patience. Once you have defined your trading plan and your instruments to trade, wait for the best setups. Okay, so that, again, that's really good advice. Sometimes we take trades and, you're even wondering why on earth you took that trade after. One of the things that we do is we journal our trades. Okay, so if you don't do that, you make sure, write that down, make sure you start to do that. Journal your trade. So in other words, go into Excel, create a spreadsheet if you haven't got one, and write down why you're entering the trade specifically, how you're going to manage it, even add something about your psychology, what you're thinking, what you're feeling at the time of entry, time of exit. You need to be able to learn to measure your setup. But the only way you're going to know if you're playing the best setups is if you journal stuff. And then if you're not, at least you can look back and say, do you know what? If I was taking the best setups, this is what I could have made. But because I was messing around and I was bored and I've taken these trades, this is what I have made. And then that sort of reality will probably show you that actually if you just wait for the best setups, those will probably yield you the returns that you're looking for. So let's continue. So Henry says, if nothing happens for hours, don't try something out of your plan. Wait. Markets are moving every day at some point. Be available and just patient. This is the great thing about working in a team here, is that we really instill that in each other. And it's very important, especially if you're working from home, you've got to really have a lot of discipline. So that's why I recommend, if you want to come into an environment like this, or, find a friend that you're trading with and just maybe sort of keep connecting, you can do things like Skype as well, just to kind of keep each other in check. So what we want to kind of go through today is help you develop an understanding of the correct psychological trading mindset, set realistic achievable trading goals and what they are and how to do it. We want you to understand the negative emotions associated with trading and develop strategies to avoid them, and finally to become inspired to take the action that you need to become a successful trader. So here are the 8 golden rules of trading. You need to treat trading like a business. Really, really important. For those that have been, trading for a few years, you can understand this. It is a business. The only thing is that you're the business owner and you're responsible for the whole thing. You need to sort of say, right, this is the time I've dedicated to trading. These are the processes. It's not just about turning your computer on, having a gamble, buying something, selling something, and then just, that's why, when you see people signing up to signal services and they just copy the trades and they lose money, it doesn't surprise me because, they're not treating it like a business. They're just looking for something to get rich, and that's just not going to work. You always use a trade plan and stick to it. Okay, so again, when you're doing a trade plan, you've done one before. If you've never done one before, what you need to think about, you want to write this down, guys, if you've not got a trade plan, is it repeatable and actionable every single time? Is it that clear? Like, everybody can agree when we see the color, white here, everybody can agree it's white, okay? Or when you see the color blue, it's blue. And it's got to be like that. Can you see the steps that you need to take every single day? Now, again, like I said before, I mentioned that a trade plan for me should be 80 to 90% systematic, 10 to 20% discretion. Now, let me explain what I mean by discretion. If you're a new trader, the discretionary bit should be even smaller than the sort of 20%. If you're quite experienced, you need to utilize your skills. So, for example, price action, like I said earlier, during my days when I was trading futures, I really understood price action. Now, some of you guys probably won't know what price action is, but price action is really understanding the movement in the price. Now, some people use volume, so if you're trading futures or equities, you can use volume, but I just literally sit and stare at the upticks and the downticks to determine whether the buyers have control, whether the sellers have control. That's my discretionary element. Everything else, how I enter the trade, is very systematic. When it breaks my line, I'm in the trade, as long as the price action is showing me that the market is going that way. Does Does that make sense, guys? Just type in yes if that makes sense, and if anybody's got any questions, I'll take a breath, pause. Wow, fantastic, Charles. Charles, I'm going to, if you don't mind, I'm just going to read your comment. That's very interesting. So Charles put, this is very true. He's basically, from what I understand, his return for the year is 44%, and he'd be at 150% if I would have followed my plan with the same drawdown and I learned this with an Excel sheet. That's great. It's great that you actually know those numbers, which is fantastic, and that's so important because now it gives you that, you know, like when you think about it, next time you want to take one of those trades that you know isn't the correct trade, it will make you think about it and think, well, actually, hold on a minute, do I want to be a 44% trader, which is by all means is a great return, or do I want to be a 150% return trader? Because if I want to be a 150% return trader, then what do I need to do? I need to avoid taking this trade, and you can see the real difference in what it will actually, your bottom line, which is really important, because otherwise, if you don't know that information, what do? You just continue to just gamble blindly, and you don't realize it, you know, and you know, this is, you know, Charles is obviously making money, but there's people out there that, you know, losing money, break even, and, you know, if they just kind of stopped and looked at their trade journal and actually kept, you know, good screenshots and good notes, you'd probably identify these things and actually be able to change them. So the next one, number 3 of the 8, is only ever risk what you can afford to lose. Again, very, very important. And the reason why this is because if you're risking money that you can't afford, no matter how good the setup is, what's going to happen is as soon as the market starts to go against you, you're going to start to feel very, very uncomfortable, you know, because you're risking money that you can't really afford to lose. So yes, of course, if you risk less, you're not going to make as much, but actually, at least you're going to have the staying power. And like I said earlier, you're not doing this right now just to for the money. You're looking at the process. So you want to think of it as, right, this is what I'm risking. This is what I'm going to make, but actually what I'm really learning is the process, the formula for how I'm going to trade. And once I've got that process embedded in my head and I've got those good principles, then I can actually then increase my account size and do it like a professional. Okay, so that's why it's really, really important. Okay, so another thing is never trade undercapitalized, so reduce your trade size if necessary. You need to manage your risk to protect capital. So what we recommend is 0.5% a trade. Now you can of course trade more. For me, I'm more than content with 0.5% per trade, and we normally have a limit of 2% a day, 6% a week, and 10% a month. Okay, if anybody wants to repeat those, just let me know. But 2% a day, I'll just quickly say them again: 2% a day, 6% a week, and 10% a month. And that's actually part of our mandate here. As part of the fund, we need to stick to that. I mean, those were the risk parameters I've always used for myself anyway. Okay, and what that basically allows you to do is you could have a bad day. You can have, you know, if you're a couple of percent down, which again is very rare, you then you know, it's just one of those things that you can recover from. Right, so we want to utilize the best technology. So it's very easy. You know, people that start off, they kind of go with free charting of you know, spread betting companies. Don't do that. Make sure you get at least some good charting. You know, we recommend TradeStation. You know, I've used them for since I started. Really love them. Anybody else use anything different? Probably you guys are. A lot of people use MT4. Just make sure your data's good. Essentially, that's really key. Always use a stop loss. Okay, I know it comes up as a sort of very kind of obvious thing to say, but you know, if you're a beginning trader especially, you know, make sure that you use a stop loss. You know, that's the whole idea of, you know, protecting your capital. Oh, I never heard of that one actually. Oh, CQG is great. What, Trading View? Oh, Trading View. Okay, fine. And Trade Interceptor. Never heard of that, James. Never heard of them. Interesting. I'll have a look at that. But yeah, as long as your data is good and you've got something that you're used to and you like the platform, then that's great. And you got to know when to stop trading. I think for me, this is probably the most challenging for people. You know, instantly when if you've had a bad morning or bad day or whatever else, the natural thing that you want to do is not to stop trading, but actually to continue trading and to try and make those losses back. And normally when I think for myself anyway, if I'm losing in the morning, it's normally because I'm probably not trading well. Of course, sometimes it's just the markets, but it could just be, I'm tired, or whatever it is. I'm not completely focused on the zone. And when you sort of see those symptoms, you've got to be able to just say, you know what, it's one of those days. I've got to stop trading now. I'm just gonna. You don't need to go to your risk limit. Even if you had the risk limit at 2%, there's no need for you to then, because if you go to your, you're not 100%. There's no need for you to go to your risk limit and then have a really tough week to try and make that back up and make a profit for the week. Just have the discipline. Cut it off. Just call it a day. Go to the gym. Do what you need to do. Just do something else for the day. And then continue trading. And I'm sure you guys agree with me. That's a challenge for a lot of people. I think it's a challenge for most people to do that, because you naturally don't want to end the day with a loss. So in essence, what we're saying here is trading must become a routine, almost a little bit boring in some sense. If you're looking for extreme emotion, as we say here, go skydiving. Because if you want to trade successfully,